Right, hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick hello that you can hear me, that you can see my screen okay? Hi guys, administrator. Sound and screen. Okay, brilliant. Thank you. Thank you, Adinda. Hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. Thank you all very much for tuning in to my FX Street webinar for today. It's my weekly slot here with FX Street. If you're out there in the chat room, can I get a quick hello? Can I see who's sitting in, who's listening? Been some interesting moves in the market last week. We had NFP out last week, and it's injected a little bit of life in the market. So we're going to go ahead. We're going to do some analysis. See what the situation is regarding the currencies that I'm particularly looking at, and the positions. I have positions open, so we'll go through some of those positions as well. So if you are out there, if you are listening, just give me a quick hello. Okay, so I'll just go to my page. Okay, well, I'm not sure if there's people out there, but anyway, if you like what you see today, guys, trendtrader.pro/app. This is the website to go to check out further if you want to get involved into trend trading. Just a background on myself. I'm a long-term trend trader. I don't day trade. I don't scalp. I'm not looking to get in and out of markets on the same day, or positions rather in the same day. And I don't just trade FX. I trade all the markets, and I'm a long-term trend trader. So what I like to do is basically go to where the money is, go to where the trends are. Sometimes that means that involves patience, but patience is a key part of trading. If you're constantly expecting instant gratification and wanting profit on a daily basis and chasing money on a daily basis, then you're going to be very disappointed, because that is not how money is made in trading. In trading, money is made in periods. All right, you can make very good profit, over 6-7 months, and then the markets go quiet for a while, and then the trends appear again. But when one market goes quiet, another market comes alive. So it's really about following the flow of money. If you're just focusing on FX, and if you're just looking at the euro dollar or the euro pound all the time, then it's not how you're going to grow a portfolio. Maybe you have the rush and the excitement of making money, and if that's what trading's about for you, it's enjoyment, is that adrenaline. If that's what trading's about, then yeah, sure, continue doing what you're doing. But if you're looking to grow an account, if you want growth, if you want to wait out the system, if you want to end up being a full-time trader, then that approach and that mindset is not what's going to get you that. You've got to really think about it more as a business. Okay, so if you want to take it further, if you want training, trendtrader.pro/app. It's a month of training. It's only £99 for plus VAT for a month, guys. So have a look at that. Okay, go on to my e-signal. Okay, so administrator, can you see my charting package there? Yeah, okay, fantastic. Okay, so we'll have a look at the currencies that I'm keeping an eye out on, and I'll let you, and obviously, and we'll also go through we'll go through the currencies that I'm trading and the positions that I have open. In addition to that, we will go through what I consider strong levels of support and resistance on the monthly time frame. So 2 weeks ago, I covered candlesticks. Last week, I covered chart patterns. This week, I'm going to explain to you what this tool represents and what I consider the major levels of support and resistance. Okay, so on the left-hand side, we have the watch list. Top, we have the monthly chart with my major levels of support and resistance. We have these pink lines. Now, these pink lines are the annual levels. So that's the high, the low, and the close of 2015. So I'm always looking at the previous calendar year when it comes to these levels. So when 2016 ends and 2017 starts, these pink lines will adjust to 2016. So these pink lines always represent the previous calendar year. So that's the high of 2015. That's the low of 2015. That's the closing price of 2015. So these are levels of support and resistance. On the weekly and the daily time frame, you have the 200 moving average, which is the black line on the weekly and the daily, and the 50 moving average on the weekly and the daily. So the 200 moving average, I look for the overall market conditions. So price is below the 200, we're in a bear market. If price is above, it's in a bull market. Same on the daily chart. Below the 200 is a bear market. Above the 200 is a bull market. In addition to that, the 50 acts as a level of support and resistance. So in a strong bearish market, I want to be below the 200 and the 50 on the weekly and the daily time frame. In a strong bullish market, I want to be above the 200 and above the 50 on the weekly and the daily time frame. If I have any other combination, then generally what I'm looking to do is stand aside. Or if there is a good trading opportunity, I want to reduce my risk. A full allocation of risk is 2%. When going against what I would consider high probability environments, let's say my criteria, I have 9 points, for example, that I would look for that need to be met on my checklist. If only 7 or 8 of them are met, then I may take the trade, but I would reduce my risk. So I'd take a trade at 1%, 0.5%, 0.25%. So it really depends on what my checklist is telling me. So if you look at the Aussie dollar, US dollar, we can see that it's between the pink lines. Now, what does that tell me? That tells me that the markets are in a consolidation. I want to see price trading above the pink line in a bull market or below the pink line in a bear market. If price is inside these pink lines, I have to ask myself whether the market is trending inside these pink lines or whether the market is consolidating inside these pink lines. If the market is consolidating, I stand aside. If the market is in trend, I may take the trade, but I would reduce my risk. So this is very much in consolidation. You can see the Aussie dollar, US dollar is just going sideways. If we look at the weekly, we're below the 200 and we're sort of above and below the 50. So very much in an area of consolidation at the moment, above the 50, below the 200. Here we're below the 50, although price is trying to push through it, but below the 50, above the 200. So there's no alignment. There's no trend on the Aussie dollar, US dollar, and for that reason, I want to stand aside. If you look on the monthly time frame, we can see trends. There's a trend. There's a trend. Remember, these are monthly time frame, guys. So you're looking at long-term trends here. Trend, trend. Here's a nice trend to the downside. Trend, consolidation, trend. But this current period of trend is made up of long periods of consolidation. So you have to question whether you want to get involved in such a currency. Okay, so that's the Aussie dollar, US dollar. Let's have a look at the US dollar, Canadian dollar. Now, the US dollar, Canadian dollar is exactly what I'm talking about. If price is inside the pink lines like this one is, we have to ask whether it's in consolidation or in trend. And you can see compared to the Aussie dollar, US dollar, this is in trend. Okay, so we had a move to the downside. We had this pullback, this retest, and that's expected because price broke through 1.3. 1.3 is a round number. In addition to that, we had this resistance level. So price broke through that resistance, broke through 1.3, came back to retest 1.3, and is now heading back down. This is just a natural feature to price. Because it's inside these pink lines, any trades should be taken at reduced risk. All right, if we go to the weekly, below the 50, above the 200, and you can see a nice trend, correction towards the 50, resistance, but move to the downside. So we're below the 50, but we're above the 200. So that's another reason. But remember, my decisions are based purely on price. So price is my primary indicator. All the other indicators, all the other factors I look at are used to basically give confidence, if you like. That are used to give confidence that the trend is in progress and that we are in a high probability environment. So, but price action itself is the most important indicator. And you can see how clean this trend is. If you open up the daily chart, look how clean that trend is to the downside. Very neat linear trend. You've got moves followed by clean pullbacks, and then the next breakout, another pullback, failed at this level, but a pullback, another breakout, pullback, another breakout. You can see it's nice, clean linear trend. This is what you want in a trend. And if you look at the size of the bars, the red bars, they're very big. They're big, nice size red bars. If you compare them to the green bars, apart from the odd green bar here and there, most of these green bars, they don't have the size of the red bars. So you can see the movement is very much to the downside. We had this correction And I've seen some very, very, very bad analysis on the internet regarding how to trade the US dollar going long. So what you have is people drawing trend lines. You know, I've seen trend lines like this. This is not a trend line. This is a bad trend line. Okay, you've got to have a logic and an understanding to the way you draw trend lines. If you're drawing trend lines like this just to justify an entry into the market, then you need to rethink A, your understanding of technical analysis, and B, question why you're trading. Are you trading just to make a bit of profit, or are you trading because you really want to understand how to make money and how to see growth? Because this is just really bad analysis. So I've seen people draw trend lines like this and go, yep, it's bounced off here, I'm going to go long. No, bad analysis. And you can see now that those long traders are now being taken out, okay, because the long-term trend is down. All this was a correction towards 1.3. That's all it was. We've now had some kind of messy consolidation, and we're now seeing weakness to the downside, below the 200, below the 50. Okay, and that is the direction you want to be going in. You always want to be trading in the direction of the long-term trend. Okay, so I have short position running on here. All right, when price breaks and closes below here, this is when I'm going to look to enter further position. So the US dollar, Canadian dollar is a currency that I'm in. Okay, let's move on. Let's have a look at the euro dollar, because people are fascinated. It's a very unhealthy obsession people have with the euro dollar. People are, I would almost say, in love with the euro dollar. They have some kind of affection towards it. It's a currency, guys. You may love the euro dollar, but the euro dollar doesn't know who you are. It has no warmth towards you. And so people need to learn to drop that unhealthy obsession, because you're going to get taken out. All right. And you can see very clearly here, the market is in an area of consolidation. Here is a trend. So this is when I was last involved in the euro dollar. Very good profit to the downside. And you can see remember, this is a monthly chart. So this is what we're looking at, 10 months of trend. After every trend, the market goes into a period of consolidation. Now, remember that the bigger the consolidation, the bigger the breakout. As the trend prior to the consolidation was to the downside, what we expect is a break and close below this and a continuation to the downside. Weekly, below the 200, above the 50. Daily, above the 200, above the 50. However, having said that, the moving averages are just flat. So this doesn't really mean anything. Moving averages, if they're just going flat, just mean consolidation. Look how flat the 200 moving average is. It's just going towards sort of 3 o'clock. If you look at it here, this is heading down. The 200 is heading down. The 50 is heading down because the trend was down. And remember, these are lagging indicators. They're based on price, so they will follow price action. After every trend, the market consolidates. And that's what we have here. We simply have an area of consolidation. Same on the weekly chart, just not an unattractive looking chart, something you do not want to be trading. So my advice is to really stand offside and not be trading that. Now, the euro pound is something that we've been looking at, and it has been looking interesting recently, but again, not one that you want to be getting involved in just as yet. The reason why, it's inside these pink lines. It's faced with resistance, pivot resistance here, and the high of 2015 acting as resistance. And if you're unsure, if you doubt that, look at the green bar. The green bar is tried to push through that pink line, and the pink line's pushed it back down again. So the bulls have tried to come in, the bears have pushed it down. So you can see how it's reacting to that pink line, which is a significant level of resistance. So what we need to see is price close above this pink line. We need to see these pivot highs cleared. We need to see this high bar cleared, and then we can start looking for long opportunities. For now, you don't want to be trading this, either long or short. Below the 200, above the 50. Below the 50, above the 200. So you can see that this is stuck between the moving averages. This is stuck between the moving averages. Okay, so again, not one that you want to be trading just as yet. All right, euro yen. Now, the euro yen is one that I've analyzed pretty much every week for quite a while now. It's below 120. There's your support level. Until price clears that round number 120, I won't be taking any trades. Now, we have a bearish bias because we're below the pink lines, but that's not enough. Remember, that's just one of my criteria. This is the first criteria that I really look for. Where is price in relation to these pink lines? If it's inside, I either stand aside or look to see if it's trending. So here we can see that it's outside. So we have a bearish bias, but it's faced with 120 support. So we need to see this level cleared first before we take any short entries. Once we take short entries, then we want to see this kind of trend present itself. You can see how quickly this trend has moved. This is back in 2012, 2013. This was the last time I traded the euro yen. Since then, I've been standing aside, and you can see why I've stood aside. It's just been messy. Okay, you only really want to be trading currencies when they are in trend. Okay, so that is when it was last in trend. That is when since then it's been in consolidation. However, if it clears 120, we could see weakness to the downside. Below the 200 and the 50s crossing over, so we have a death cross taking place, which is good. We're below the 200 and we're below the 50. So, we do have alignment, but the structure is not very interesting. Look at the euro yen, very messy, very choppy, not a currency you want to be getting involved in just as yet. Remember the US dollar, Canadian dollar? Let's go back a little bit. Look at this area here. This is what you want, this kind of trend, a nice, clean moving trend with these sort of pullbacks, short-lived pullbacks, breakouts. That's what you're looking for. And so the last time we really had that was back here. So this is when I last traded it. You can see this nice trend to the upside. Since then, it's just been sideways, a bit flat. When it has moved, it hasn't really moved with any conviction. All right, so they have been quite short-lived. However, if it clears 120, then I will be looking to get back in. All right, so that's the euro yen. Let me just go to the chat box. Hi, Ian. Thank you. I think that's your name. Irrational obsession attraction. Yeah, exactly. All right. By the way, thanks for commenting, guys. It's good to know that there's people out there actually listening in. So thank you for your comments. If you have any questions, please just put them in the chat box. Okay, let's have a look at the pound Aussie dollar. Actually, let's have a look at the pound dollar. The pound dollar also, if you look at the monthly chart, it's still sort of within resistance. The pink lines acting as resistance and the round number 1.4 acting as support. And you've got this support level here. So for me, for this particular currency, it's not one that I'll be interested in taking any short entries until this support level, which is the 2009 support level, until this is cleared. Once this is cleared, that's when I'll start looking for short entries. Okay, so for that reason alone, in reality, I don't really need to go and do any further analysis because price is my main indicator. Price is my main indicator. Beyond price, I then have support and resistance and moving averages. And that's what we're looking at here. Very simply, I've got my support and resistance and my moving averages. So price is my main indicator. I'm looking at what price is doing. Is it in a trend? Is it in a consolidation? Is it pulling back? Is it breaking out? I look at what price is doing. Then I look at the support and resistance levels to see where price is in relation to support and resistance levels. Support and resistance levels are very important because they act as good target levels. So when price is in a trend, we know how far price is going to go towards. So they are leading indicators. I then look at the 200 and the 50 moving average to confirm that. So you've already seen that if the moving averages are following price, so if price is in a trend, the moving averages will be heading down or heading up. If price is in a consolidation, the moving averages will be flat. And this is a very good example. The pound dollar is flat. It's been flat really since the start of the year. It hasn't really gone anywhere. And the 50 moving average is confirming that. It's just flat. 200 moving average is still heading down, but remember, that's a much slower moving average. The 50 is going to react first, and you can see how flat it is. So for that reason, not a very attractive looking chart. Pound dollar is not one that I'm looking to get into. Right, now the pound Aussie dollar. It's inside the pink lines. And so for that reason, we want to look at whether it's trending or consolidating. And we can see very clearly it's in trend. Trend, correction to the upside, and now we can see price heading back down in the direction of the trend. You guys can see that, right? Trend, bounce, and then correction. Now, this is a very good example. Look at how that pink line is acting as support, and look at how that pink line is acting as resistance. And we have had weakness to the downside. Okay, remember also the figure 2, major level there. Figure 2, round number, acting as a level of resistance. Okay, and price has since bounced to the downside. We can see also how price has bounced off the 50 moving average on the weekly time frame. So we had a bounce off the 200, pull back to the 50, a bounce off the 50. We had a bearish engulfing candle, and we're now seeing weakness to the downside. So now I want to see price move towards 1.9. That's the next round number. Ideally 1.8 by clearing this whole support zone, and then 1.6, 1.7, 1.6, etc., etc. On the daily time frame, price is trading below the daily 200 and above the 50. Okay, so this is going to be the next level of support. All right, now I have a short position on the euro. On the pound Aussie dollar. I have a short position. It's been triggered. It's in a small bit of profit. Okay, and we can see that price is heading down. So I am short on the pound Aussie dollar, but I'm going to manage it accordingly when price gets to the next level of support. All right, the next currency we'll look at is the pound Canadian dollar. It's very similar to the pound Aussie dollar. You can see we had a price in a trend between the pink lines. We had a move towards 1.9. There's your resistance, bounce to the downside, above the 50, below the 50, above the 200. So that's on the weekly time frame, and below the 200 and now back below 50 on the daily time frame. Okay, so again, it's not, if I compare the pound Aussie dollar to the pound Canadian dollar, the pound Aussie dollar was the better setup, and that's why I took a short position on the pound Aussie dollar. I don't want to be trading everything. I just want to be trading the best trends and then repeatedly compounding. Okay, pound Japanese yen. Pound Japanese yen below the pink lines, below 160, very much a bearish bias, and you can see there's very much a trend in play. So there's your trend to the downside. You can see price in a consolidation. It's just going sideways. That's because of round number 160 acting as a level of comfort, if you like. But we are now seeing weakness, and we want to see further momentum towards one. We really want to see 150 cleared. Once 150 is cleared, then we could see price target all the way down to 120. Below the 50, below the 200, below the 200, below the 50, price just going sideways. So we can see that we are very much in an area of consolidation. I have positions running since 180. So once price cleared 180, I have short positions running. These positions are still open. I've got, I think, 3 or 4 positions. I can't remember. So I've got positions running along the length of the trend. My last position was here. This is where my last compound was triggered. And you can see that when I was triggered, price has been going in and out of consolidation. So it went against me in profit, against me in profit, against me back in profit now. But until it clears 150, I'm just going to allow price to continue doing its thing. All right. Last currency we'll look at is the dollar yen. Okay, dollar yen, we can see again also has a bearish bias. Below 110 as well. We had this move through 110, retest of 110, correction back down. So you can see how price is looking to move back in the direction of the trend. This pivot support is cleared, then price could move towards 100. Ideally, when 100 is cleared, we want to see price move all the way down to this resistance, support level here. On the weekly, it's at the weekly 200 moving average. So this is acting as an immediate level of support. We're below the 50. Look at the 50. If you look at it, if you look at the way it's structured, you can see how it's angling down. And if you look at what price is doing, it's in trend. So the 50 is confirming that. The 200 is acting as a support level, and it's still heading up, but that's because a long-term trend is bullish. So this is still bullish. Once this clears the 200 moving average, then the 200 will start hooking down. But that's really going to happen once price really confirms a bear trend. And for me, that will be once price clears 100. And if you look to the left, you can see that it consolidated for quite a long time around the 100 level. So you can see how significant it is. Daily, below the 200, below the 50. Daily is looking really interesting because the 200 is heading down, the 50 is heading down. You know, this is looking interesting. We have short positions on the dollar yen that were triggered around this level here. So these short positions now are in profits. Okay, what you want to have are different strategies for different market conditions. Remember, you've got to want an edge. Trading is all about developing an edge. Okay, you've got to know how to define your edge. If you don't know how to define your edge, then you don't have an edge. I had this conversation the other day. I found a forum on Facebook. I was just messing around on Facebook, and I came across a Forex forum, and I went into the forum. I had to wait for the administrator to approve me coming into the forum. So I went into the forum to have a look around and see what people talk about. And to be honest with you, it was a real mess. It was a real mess. People are talking about the euro dollar. Someone's long, someone's short, someone's scalping, someone's day trading, someone's on a 5-minute time frame. There's no consistency. There's no cohesion. There's no understanding. It's just gambling. And one of the guys put on a thread. There was a guy, he put on a thread and he said, "Oh, I'm a mentor. I teach this kind of method, da 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 da." And he put on a screenshot of his winning trades. All right. So he had a screenshot of his winning trade. I think there was something like 10 or 15 trades he'd taken, and only one of them was a losing trade. The rest were all winning trades. And he wasn't even there weren't even large sums of money. It was like 300, 400 pounds per trade. Okay. It was not significant amounts, right? And I asked him, first of all, my comment on this post was, well, your winning trades don't really mean much because I don't know what your risk management is. If you can explain your risk management better, then I can understand whether you're over risking or not. And secondly, can you define your edge as to when you took these trades? What is the logic behind them? What is your edge? And his response to me was, what is an edge? So if you have a mentor out there and he can't explain his edge, and you approach him and for mentoring, that is the first question you should ask him. What is your edge? If he can't explain it, you've got to question what he's going to be teaching you. Okay, so guys, those are the currencies that I wanted to go through. Are there any questions, please? No questions out there. Is anyone out there? Because if there's no one out there listening, then I'm just going to call time on the webinar, and I won't go through the support and resistance that I was going to go to. So if you can just let me know by saying a hello. Okay, if people are watching this on replay, once the recording comes out, and if you want to know in more detail what these support and resistance levels are and how they are calculated, then please contact me and I'll be happy to send you a PDF on how to. Okay, Sushil, we've got one person saying hello. Okay, all right. Well, Sushil, I think you've rescued the day, so I'm going to explain this. So bear with me 1 second. Okay. So I've changed my screen. Administrator, can you let me know that you can see my scribble pad here? Hi. Okay. Oh, okay. Right. Look, there's people there. Fred. Hi. Thank you. Hello. Okay. I really don't understand why. Okay, brilliant. Okay, I'm glad there's people out there because I really don't want to be talking to myself. Okay, thank you. Sushil, brilliant. Okay, thank you. So you guys can see my scribble pad. Okay, can you tell me, just so that I know you can see the colors, can you tell me what color? Can you tell me what color that is, please? Fred, yeah, FX Street is brilliant. Blue. Okay, fantastic. Okay, thank you, Adinda. All right. Okay, fantastic. Okay, so let me quickly explain to you what I consider major levels of support and resistance, right? Now, first and foremost, I'm looking to do this. Oh, what's going on here? Something's happened with my... Let me bring this up again. My pen's gone all funny. Yeah, there we go. Okay, fantastic. Okay, so I look for support and resistance on the monthly time frame, not on the daily or weekly or 4 hour or 1 hour 15. This is where I draw my levels of support and resistance. So what do I consider major pivots? And it's very simple. Major pivots are, just change the color. A major pivot is a high bar with 10 bars on either side. I know I haven't drawn 10 bars, but what you're looking for is a minimum of 10 bars on either side. Okay, so that's 10 plus and 10 plus, 10 plus, 10 plus. That is what I would call a major level of resistance. A minimum of 10 bars on either side. Remember, these don't have to be in a straight line. As long as that high point is not broken, that is what you're looking for. Okay, and if we reverse that logic, okay, so you can see that there's a low bar here, and this has 10 bars minimum on either side, and this is what I would consider a major level of support. Remember, in trading, you want to remove the subjectivity. Removing the subjectivity is very, very important. You want to have logic to everything that you do. What most people do is they bring up a time frame, whatever time frame it is, and they'll just randomly draw charts, support and resistance levels on there. They won't look to think, why is that a support or resistance level? What is the logic behind my support and resistance levels? You want to have a clear understanding. And this is how I create my support and resistance. I'm looking for a high bar or a low bar with 10 bars on either side. Sushil, what was the web? I'll go through that in a second. Okay, yeah, and my support and resistance are all done on the monthly time frame. So now what I'm going to do is, administrator, if you can let me know, can you see? Sorry, my thing's gone a bit funny. Can you see my e-signal charts? Can you see my charts, please? Yes. Okay, fantastic. Okay, so if I open up the monthly chart and if I go to the euro dollar, okay, and I'm just going to simplify this a little bit just to make it a little bit neater. So what you can see is pivot size 10. Okay, and I'm going to change this from square wave to flat line. Okay, and so what you can see is that I have 1, 2, 3, 4 red lines. These are all highlighting those major pivots as resistance, and these green lines are highlighting all the major pivots as support. So if you look at this point right here, this is telling you that this to the left hand side, always look to the left hand side for the pivot. So this bar right here has 10 bars to the left and 10 bars to the right. That is a major resistance. This one has now been detected. This has 10 bars to the left and 10 bars to the right. This has 10 bars to the left and 10 bars to the right. This bar has 10 bars to the left and 10 bars to the right. So if I take back price a little bit, let's take this bar here. You can see quite clearly we've got more than 10 bars to the left. If we count to the right, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 10. When that 10th bar is confirmed, you can see how the software will automatically start drawing. You can see it appearing at the top here. So that is now telling you that this has been confirmed as a major pivot. This line will remain red until the next major pivot is confirmed. So if we look at, for example, this level down here, you can see there's a green line. This green line also happens to be the low of last year. So this has now been confirmed as a major pivot support level. So we've clearly got 10 bars to the left, more than 10 bars to the left. If we count to the right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this red sort of spinning top like shape, that is where the 10th bar was confirmed. You can see that none of these bars have broken below this pivot low. That's the lowest point. And you can see now that the software is drawing a green line telling you that this is a major pivot support level. And this tool that I have will automatically highlight these major pivots on every single currency. So there you go, automatically highlighting it. So I don't actually need to do anything. So if you think about it, if you are using free software and you're drawing these on manually, this takes a lot of time. Whereas I'm going through every single chart. Look how quickly I'm going through every single chart, and the software is automatically highlighting these levels for me. This is why, you know, good tools are important, because it saves you time. What most people are doing in hours a day, I'm doing in 10 to 20 minutes. I don't spend more than 20 minutes a day trading. Rest of the time I'm free to do whatever I want, because my trades are all long term and my software is doing 99% of the work for me. It's the final execution I do myself. Okay, so you can see how it's doing that for you. And it's not just on currencies, it will do it on a stock. There you go. So any kind of stock that I'm looking at, yeah, any kind of stock that I'm looking at, it's automatically highlighting it for me. All right, the same for gold. Okay, so you can see how commodities. Okay, so you can see how this tool works. So that, guys, is what I consider major levels of support and resistance. Okay, so transfer them onto the monthly time frame. Now, why are they useful? Because if you think about it, they act as good levels where price can move. So if let's look at gold. I'm not trading gold because it's in a consolidation. I traded gold for many years. You can see how I traded it for many years in this bull run. I've been trading since 2007. So really from around this area here, when I started learning to trend trade, you can see that's where I've been trading gold for very good profits. Since then, it went into a correction, a little bit of a move to the downside, but since then it's been very messy. So I'm not interested in trading gold. People are obsessed with gold because it's a shiny metal and it's pretty and it's, you know, I don't know. But from a trading perspective, you want to forget about how pretty gold is. And you want to focus on what the chart is telling you. And the chart is telling you that it's a pretty ugly looking chart. Okay, so what we want is price to clear the pink line. So for that reason, we're not trading it. But also, if you look ahead, there's quite a lot of resistance levels. When price clears 1500, that is when I'm looking to go long. And once it clears 1500, I would like to see price move towards this level. If it clears this level, if it clears this level, 2000. And once it clears 2000, new heights. If we go have a move to the downside, then I won't be taking any shorts until it clears 1000. When it clears 1000, then I'd like to see price move to these levels here around the 700 mark. And if it clears that, then down here. Now, one thing to note, guys, is that a lot of these major pivots will appear around round numbers. Look at that level there. It's around 1900. Look at that level, 1800. Okay, look at this level here, 1200. This level, just above 1000, around 700. The lowest point on the chart, 200. So these major pivots will usually, not always, but more often than not, appear around round numbers. Okay, guys, that is my presentation for today. Okay, I hope you found that useful. I'm just going to go to change my screen share. Okay, so for you guys who are asking about the trend trader, that right there, I'll put it in the chat box. Okay, so trendtrader.pro. Where is the chat box? There it goes. Okay, trendtrader.pro, guys. That is for training. Trendtrader.pro/ebook. If you haven't downloaded the free ebook, guys, please download that ebook. Okay, so that ebook is totally free. This is a great place to start. All right, but remember, guys, there's a difference between technical analysis and trading. This is all about technical analysis. Trading is a whole different side to it. Entry points, stop losses, compounding, risk management, identifying where the money is. Are you in stocks? Are you in commodities? Exit management. There's so much more to trading than just knowing support and resistance and moving averages and chart patterns. This is where a lot of people go wrong. A lot of people come to me and say, oh, you know what? I know technical analysis really, really well, but I can't seem to grow my account. I can't seem to hold positions. That's because you're a technical analyst. You're not a trader. If you want to be a trader, you have to get the whole other side of it correct. It's not difficult, but you've got to know what you're doing. You can't allow your ego to think that technical analysis is trading. And this is where way too many people go wrong. Okay, and people come to me and say, I know the basics really well, but I can't, I just can't hold my positions. Well, you need to take things to the next level. You need to take it a little bit more seriously. Okay, so this will really help you with the technical analysis side of things. If you are on Twitter, please follow me, twitter.com/the-dynamic, sorry, not the dynamic trader, just dynamic trader. Okay, guys, I'll be doing another Periscope. Sorry, not Periscope. I am also on Periscope. So if you are on Periscope, please follow me. But also, I am doing another webinar at 6 p.m. So 1 hour and 10 minutes. So if you go onto Dynamic Trader, you will find, let me just see if I can find it, guys. Here you go. Okay, so if I click onto that, and if I just put that in the chat box as well. Okay, so if you want to come on to my 6 p.m., which will be pretty much similar to this, but I will be using a slightly different screen where I'll be using some of my trend filters, so you get an idea of the kind of software that I use. Okay, so if you want to come into that, again, it's totally free. All right, we'll be doing analysis. Ignore that date, by the way, March 30th. I need to change that. Ignore that. The webinar link itself works perfectly fine. Okay. All right. Thank you very much. Thank you, Adinda. Apologies for the late start, but thank you for sitting in, and I hope you found that useful. If you have any questions, please contact me, and it'd be great to have you within our trend trading community and really teach you guys how to sort of take your trading to the next level. Okay. Strategy training, risk management, compounding, stop loss management, stocks, commodities, foreign exchange, everything is covered. Okay. All right, guys. Thank you all very much. Have a wonderful day. Thank you. Bye-bye.